Hi, my name is Kevin Retcher. This is your closing bell for Tuesday, May 13th. Today's market action closes on the backdrop of a persistent 10-year. 10-year over the last 5 days has been at 4.28 and as high as 4.5. Most mortgage rates are based upon the 10-year as a benchmark for mortgage rates, 30-year fixed. The 10-year hovering between 4.3 and 4.5 has 30-year fixed rates range bound in that 6.76 range, unchanged from last week, about 30 basis points lower than a year ago. Being that we are lower than a year ago, that does have some increased mortgage demand, defying some expectations. Applications for mortgages were up 11% last week. One of the other things that was surprising with that activity was that GDP growth was disappointing and manufactured data was also soft. So it was unexpected that with that gloomy outlook that mortgage applications would be up. The other interesting fact with that gloomy economic news is that 13% year over year increase in purchase applications and 51% annual increase in refis based upon us being 30 basis points lower than a year ago. So when there are dips, people are taking opportunities to cash in on a refi to save some money. First-time homebuyers are making some historic inroads this year. First quarter, they claimed 58% of agency loans. And Gen Zs, 35 and younger, were driving the trend because they're not unencumbered by the lock-in effect that discourages existing home buyers from giving up their low rates and taking a higher rate and moving up into a bigger home. Affordability still remains the major obstacle. Mortgage payments are 82% higher than comparable rents nationwide, with home prices continuing to rise, especially in the Northeast, which saw a 10.3% annual gain. The national median single-family home price climbed to $402,300, up 3.4% year over year, pushing the typical monthly payment to $2,120. The crossroads for the housing market is navigating a complex environment. We have an elevated 10-year Treasury. Range-bound movement has kept mortgage rates steady, but still elevated by some standards. This has suppressed move-up activity, but opened the door for the first-time home buyers who now dominate agency lending. The demand, despite economic jitters and affordability, buyers are still stepping up, driven by demographic shifts in the lower generation age demographics, perhaps having a sense that interest rates, while high, are unlikely to fall, and maybe purchasing homes that are in their affordable range, maybe not their dream home. The affordability squeeze, the gap between renting and owning, has never been wider. The home prices continue to set new records in most metro areas. This dynamic is likely to persist as inventory remains tight and repeat buyers stay on the sidelines. So the play currently on the 10-year and with mortgage rates continues to set the tone for the housing market. While affordability challenges are acute, the economic signals are mixed that the surprising surge in mortgage demand, especially among first-time home buyers, suggests that pent-up demand and demographic momentums are powerful forces. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage. This was your closing bell for 5/13. If you'd like to make a loan application in Virginia, Maryland, D.C., hit the green button. If you'd like to schedule an appointment, hit the orange button. That will take you to my calendar schedule, and you can schedule online. If you have any questions, give me a call. My phone number is 703-799-5626. And here at First Meridian Mortgage, one application, one credit pull. I shop 10, 15 different lenders on your behalf and try to get you the very best rate. If you're interested in that, give me a call. Talk to you soon.